It's Tuesday, 16th of December, 2025. Welcome back to your news update on Blip Brief, crisp, but almost everything updated every weekday. We're starting our deep dive today, firmly planted on D Street, where Indian equity markets, well, they closed marginally lower yesterday. After showing some resilience, recovering from early losses, it looks like the street just decided to take a breath.
It did. It's moving into what analysts are calling a predicted consolidation phase. And the reason for this collective inhale, it's the usual suspects for year-end trading. Textbook volatility, uncertain global macro trends, all compounded by thin volumes.
Right.
But if you want to see the real market anxiety, you have to look at the currency desk. The rupee, well, it closed at yet another fresh record low against the dollar.
Another new low. That just signals some serious external pressure. We keep hearing of the rupee weakening, but what is the core mechanism driving this right now?
We have a nasty convergence of, let's say, three pressure points. Think of the dollar as being in high demand and the rupee, well, undersupplied. First, you have the sustained offloading of Indian stocks by foreign institutional investors, the FIIs.
So when they pull their money out, they're converting rupees back into...
Exactly, back into dollars, billions of them. That instantly reduces demand for the rupee and drags its value down.
And the other two factors.
Well, second, the existing trade deficit continues to loom large. We still import more than we export, so that requires a steady supply of dollars. And third, there are ongoing developments related to the U.S. trade agreement. All that uncertainty translates into caution, hedging, and fears of capital outflow.
Speaking of capital movement, let's turn to a corporate journey that just hit a major milestone. We're watching Walmart-owned Flipkart's path to an IPO very closely.
Absolutely. Flipkart just got the crucial clearance from the National Company Law Tribunal, the NCLT, to shift its domicile.
From Singapore back to India.
That's it. And this isn't just a paperwork shuffle. It's a critical regulatory hurdle, really the final stage before its highly anticipated local listing.
Why is that shift from Singapore so important for their IPO, though?
Two reasons that matter to you, the investor. First, it streamlines everything, puts the company under Indian jurisdiction, which makes the whole IPO process and future compliance much simpler.
And
Second, and this is crucial, it lets them simplify their corporate structure. That often means more favorable tax treatments for the final listing. It's a very clear-cut signal that Flipkart is, well, coming home.
Now, on the flip side of that, we saw a brutal crash in clean energy yesterday. Renew Energy Global stock plunged, 28%?
A staggering 28% drop in morning trade on the NASDAQ. A very violent repricing of the company in just one day.
What happened?
It was a massive rug pull. The vacuum was created when Masdar, the Abu Dhabi-based investor, pulled its almost $1 billion cash offer to take the company private.
And when that valuation floor disappears, the market just reacts.
Violently. The loss of faith was immediate. It just shows how sensitive the clean energy sector is to large-scale committed financing.
And finally, a big strategic move in banking. HDFC Bank got the nod from the RBI.
Yes, regulatory approval allowing its group entities, like HDFC Mutual Fund and HDFC Life, to collectively hold up to a 9.5% stake in IndusInd Bank. That's a significant bump.
Why are they doing this?
It's a very calculated strategic play. The HDFC Group's combined investments were going to breach the old 5% threshold anyway, just due to market growth.
So this just formalizes it?
It formalizes the strategic interest of a major financial group in a peer. Does it mean a future takeover? Not necessarily.
Yeah.
But it definitely signals HDFC sees a lot of value in IndusInd Bank.
That's a great summary. Now let's shift from market volatility to the actual numbers that underpin the economy.
Yeah.
November's trade data, for example, tells a very different story.
It really does. India's goods exports showed significant strength, leaping by just over 19% in November compared to last year. And the velocity of that rebound is what's fascinating.
You're right. We didn't just claw back losses. We jumped from an almost 12% contraction in October to a 19% expansion. That's a massive swing in just 30 days.
Exactly. And the quality of this rebound matters. It was buoyed by high-value exports. Electronics, engineering goods, gems and jewelry, pharmaceuticals.
The core manufacturing is driving the revival.
Right, which speaks to healthier long-term structural growth, not just, raw commodity exports.
Okay, a 19% leap is impressive, but is it sustainable? Or are we just seeing manufacturers clearing out inventory before year-end?
That is the right question to ask. And we do need to monitor the global demand environment. But the fact that electronics and engineering goods are leading suggests global supply chains are still actively sourcing from India. It's a good sign.
Turning to prices, let's talk inflation. We're still in deflationary territory for wholesale prices. The WPI narrowed slightly to, what, negative 0.32%?
Correct. Second straight month of deflation, which is good news for manufacturers. It means their input costs are easing. The Y is softer pricing across food, fuel, and mineral oils.
But the forward forecast isn't entirely benign, is it? Nomura seems to be ringing a bell about consumer inflation.
Yes, and this raises an important question. How does wholesale deflation translate to what you pay? Nomura predicts retail inflation will rise to around 1.5% in December.
And what's the driver there?
It's not necessarily new price spikes. It's more about unfavorable base effects from last year when prices were very low. Plus, they see food deflation gradually unwinding, so that relief we felt on food prices might start to fade a bit.
Moving to the workforce, we saw improving employment figures. India's unemployment rate fell to 4.7% in November,
That's the lowest level recorded since April. And what's encouraging is that joblessness is easing across both rural and urban areas.
which suggests the economic activity is actually translating into jobs.
It does. It means the strengthening export sector and manufacturing revival are successfully absorbing labor, which is essential for sustained consumption.
Now, here's a fascinating structural shift in the tech sector we've been tracking. The tectonic shift. A massive divergence between global capability centers, GCCs, and traditional IT services firms.
The numbers confirm a tectonic plate shift. GCCs are now hiring tech talent at 4 times the pace of traditional IT firms.
4 times the pace.
To put a number on it, GCCs are expanding headcount by 18 to 27% year on year. That contrasts sharply with the sluggish 4 to 6% growth among the IT giants.
So why are the big global corporations suddenly hiring so much in their own GCCs in India instead of just outsourcing?
Because the mandate of the GCC has fundamentally changed, they've evolved from simple cost centers into strategic R&D and innovation hubs. They're hiring high-value niche talent for things like AI, cybersecurity, cloud engineering.
They build their own core intellectual property
Yeah.
in-house.
Exactly. And frankly, the traditional IT firms are struggling to acquire and retain that same high-end talent. The GCCs are poaching them relentlessly.
And this structural change is benefiting the mid-sized players, correct?
Absolutely. The nimble mid and small cap IT firms are gaining market share. They increased their share by about 0.2 percentage points in the first half, while the top 6 large caps collectively lost about 0.40 percentage points. The market's rewarding specialization over sheer scale.
Finally, before we jump global, a look at the future IPO pipeline. It seems India's primary market is getting a huge dose of healthcare next year.
Indeed. We're set to see a heavy infusion of healthcare companies. We're talking major hospital chains, IVF platforms, with public issues expected to total a significant amount. This just reflects incredibly strong fundamentals for the sector.
Shifting gears now to the global backdrop. Wall Street closed lower yesterday. Investors are getting defensive ahead of a big week of economic data, but the real nervousness seems focused on AI.
It's a tale of 2 AI stocks, really, showing the market's extreme mood swings. Oracle shares fell sharply, down 14% just after reporting revenue that narrowly missed projections.
A single miss was enough to stoke those AI bubble fears.
Instantly. It suggests valuations are priced for absolute perfection. But then, conversely, you have a company like AMC Robotics Corporation surging nearly 170% on Monday.
170% in one day. That's pure volatility.
It is. It shows the market as being incredibly selective. It's either an explosive feast or a brutal famine. You deliver, you're on a pedestal, you miss slightly, and the downside is severe.
Meanwhile, global oil prices moved lower. A welcome relief for India. What fueled that dip?
2 major forces. First, growing optimism for a Russia-Ukraine peace deal after the U.S. offered NATO-like security guarantees. Second, weak economic data from China. Their retail sales growth slowed to a COVID-era low, raising serious concerns about global demand.
And speaking of Russia, they're launching a massive financial counterstrike over their frozen assets.
Yes, Russia's central bank has filed a lawsuit in Moscow. They're seeking a whopping amount in damages from Euroclear. This isn't symbolic. It's the formal start of a long legal battle over those frozen assets.
Sticking with Russia-India ties, we saw a key military logistics agreement ratified.
That's right. President Putin signed a law ratifying the RLOSS agreement with India. It outlines procedures for sending military formations, warships, and aircraft to each other's territories. It really strengthens defense cooperation.
Now let's address a major policy shock from the U.S. that is set to hit Indian IT firms directly. A proposed new H-1B fee.
This is a huge, game-changing cost burden. A new $100,000 fee for H-1B workers hired from abroad. This is probably the largest restriction yet on skilled foreign worker employment.
Why does this disproportionately hit firms like Tata and Infosys?
Because of their business model. They operate on a high-volume, cost-competitive, staffing-led model. They rely heavily on the H-1B visa, a fee that high per worker just obliterates the margin on their contracts.
It will force them to hire and place people overseas instead.
Almost certainly. They'll have to rely more on their offshore delivery centers to service U.S. clients. It will fundamentally reshape their U.S. operations.
And a grim update from Australia. Authorities confirmed the motive behind the deadly Bondi Beach attack.
Yes, they confirmed the attack, which killed 15 people, was motivated by Islamic State ideology. This led to an immediate political response, and leaders have now agreed to tighten gun laws across the nation.
Okay, let's wrap this up with our innovation closer, focusing on what is arguably the most important breakthrough in India's energy transition. This is about battery energy storage systems, or BAS.
This is truly a turning point. It moves renewable energy from being a problem for the grid to a solution. We have seen a dramatic, just a complete collapse in the cost of BAS technology.
How dramatic are we talking?
Well, just a few years ago, the cost per unit for firm renewable power was discovered through bidding to be around 10 rupees and 18 paise. The latest competitive bidding brought that price floor down to just 2 rupees and 10 paise per unit.
That is immense. That's beyond cost reduction. That's a complete paradigm shift.
Precisely. It represents an approximate 79% cost reduction in just a couple of years. Why does this matter to you? This collapse is crucial for making firm renewable power affordable and commercially viable.
So we move from renewable energy being sometimes power to reliable power.
That's the holy grail of grid transformation. It means the energy from a solar or wind farm can be stored and reliably dispatched at a competitive price, even against fossil fuels. This breakthrough means India can now seriously plan for a grid powered almost entirely by renewables. It's an astounding acceleration.
A perfect note to end on. While the macro environment is challenging, India is quietly solving fundamental problems at scale. And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.